Hey everybody, welcome to Money's No Object. I'm your host, Dylan Howell. This is episode number 431 of our YouTube channel and podcast, and I cannot be more excited to continue sharing with you guys personal finance topics that I think could be useful for you in your long-term financial journey. Today we are going to be talking about taxes, and specifically we're going to be talking about the taxes that President Joe Biden is expected to at least attempt to levy on the richest in our society today, and the impacts that can have and what that may look like, and ultimately just get this better idea of what taxing the richest among us is going to be like if it actually becomes a reality, because so many people call for it. The president, many members of Congress call for this type of legislation, and if something like this does occur, who does it impact? Why will it impact them in this way? And ultimately, what is the policy going to look like once it's implemented? So stick around for a discussion of all that and more in today's episode. Before we get started, though, if you could go down below, hit the big red subscribe button, like this video, leave me any feedback in the comments down below, and I'll be sure to respond to anything you leave down there. If you're listening on Apple or Spotify podcasts, be sure to subscribe and leave me a review on either one of those platforms. Follow me on social media at MNO with Dylan, and that's really good supplemental materials to all the things I'm putting out in these long form episodes on YouTube and the podcast every single day. Then if you need somebody to help you to build a financial plan and keep you accountable to that plan over the long term, then I can do that. Just DM me on any of the major social media sites and tell me that you are interested in financial coaching sessions, and you and I can begin working together, pushing towards your long-term financial goals and ultimately pushing you on towards long-term financial freedom, which is what I hope for every single individual who's watching or listening to this show on a day-to-day basis. Now, I ran across an article this past weekend that I think is interesting and that I think many people would want to talk about. It is a hot button topic, and it has been for some time, and it remains hot because very little has been done on this front. And so many people keep asking for it as far as regulation and legislation are involved, but very little has been done. And that is the idea of the billionaire tax, right? Or the tax on the rich, right? AOC has the whole tax the rich logos and memorabilia and all this type of stuff, right? But the headline that stuck out to me, it said President Joe Biden to propose new 20% minimum billionaire tax. And that kind of piqued my interest because I'm like, okay, well, what does a 20% minimum tax look like for billionaires? And this has always been kind of tricky. And the reason that all of this is very tricky is because much of the wealth of billionaires is not what we would call liquid wealth, right? It's not in a checking account. It's not in a savings account. Much of the wealth is either in the ownership of a business or just in the ownership of investments in general, right? And to create some type of tax that would get at the wealth of the richest among us is going to be, very interesting, because there are many of them that don't make just, outsized, stupid, large salaries relative to their wealth, but their wealth is very, very high because of, having a publicly traded company whose, stock price has, really risen to a point, or your ownership stake has risen to a point to where you're very well off, you're very wealthy. Now, just the fact that that may occur doesn't mean that somebody's not going to pay any taxes, and we'll talk about that as well. But relative to a billionaire's wealth, they don't pay large percentages of their wealth in taxes, especially the top of the top that are out there. And so that's why a lot of Democrats especially push this idea of taxing the richest, taxing the wealthiest out there, saying that they need to quote unquote pay their fair share, right? And so this is the proposal. We'll go through what they're asking for, what they're looking for, and then what would this actually look like, and is this anything like anything we've seen in the past, and what would it look like in its implementation? So President Joe Biden is expected to propose a new minimum tax that would largely target billionaires when he unveils his 2023 budget, according to a document obtained by CNBC. And if we didn't know this already, presidents every year, along with Congress, they bring out these budgets, right? The budget that they want to abide by for that next year. And they do so in hopes of doing whatever they need to do towards their agenda. Some have decided, in the far past at this point, that they'll use it to balance the budget, to get rid of deficits, to cut a lot of spending. Some, just throw caution to the wind and do tons and tons of spending. And that's been the recent past in this country, just tons and tons of spending. But nonetheless, within this budget, and to fund this budget, Biden wants to get this new minimum tax passed. Now, called the Billionaire Minimum Income Tax, it would assess a 20% minimum tax rate on U.S. households worth more than $100 million. So it's not truly a billionaire tax, but most of the households over $100 million in wealth are going to be close enough to that billionaire. And then there's many, many billionaire households that are up there with the 100 million plus. And so that's why they're calling it this billionaire minimum income tax. And they expect over half the revenue from that tax to come from the households worth $1 billion or more. So thus comes the name of the tax. Now, this minimum tax would make sure that the wealthiest Americans no longer pay a tax rate lower than teachers and firefighters, the document said. Now, again, this is a fallacy in many cases, right? I remember I did an episode a while back on this ProPublica report that came out and was talking about the amount of taxes that billionaires actually paid. And it was looking at the amount of tax they paid relative to their wealth, relative to their net worth. And many of the quote unquote tax rates there were very, very low. But the truth of the matter is that for the typical American, for you or for myself or for somebody who has a net worth of, let's say, $5 million, and maybe they make $200,000 a year, their tax rate is not related to their wealth. Their tax rate is related to their income, right? And like I said previously, the income of the richest among us is not indicative of the wealth that they have in the vast majority of cases. And this is going to lead to some of these, perceived inequities in the amount of tax that is paid. But ultimately, we are all treated the same way when it comes to the taxes that we pay. It's just that when you have such large amounts of wealth, what's going to end up happening? You're likely going to live far more off of the growth of that net worth, the growth of that wealth, and end up paying lower tax rates. Now, is this right? Should this be the case? That's not necessarily my argument. My argument here is that it's not different, right? It is everybody is actually getting treated the same. It's just when you have that level of wealth, you can benefit. And this idea that they pay lower tax rates than teachers and firefighters on income, obviously they will pay the taxes that they owe on their income, right? But on any realized gains from their wealth, it may be long-term capital gains rate, which can be just 20%, or any increase in wealth that they have that may be tax deferred into the future. So this idea that they pay lower rates, maybe on their wealth and maybe also on the income that they take overall. But ultimately, the amount of taxes that they pay drives the tax revenue in this country, just period, point blank. Now, the proposed levy is expected to reduce the deficit by about $360 billion in the next decade, according to the document that was given to the press. Now, if a wealthy household is already paying 20% on their full income, they won't pay an additional tax under the proposal. But if they pay less than 20%, they'll owe a quote unquote top up payment to meet the new minimum. So as a result, this new tax will eliminate the ability for the unrealized income of ultra high net worth households to go untaxed for decades or for generations. Now, I thought that statement was particularly interesting. It said, will eliminate the ability for the unrealized income to go untaxed for decades or generations. So if we're talking about unrealized gains on investments, this is going to, again, be very hairy and very tricky to decide upon. What are we talking about when we're talking about their unrealized income. Obviously, you get taxed on your realized income, and that's just true, period, right? If the richest person in the world decided, if Elon Musk or Jeff Bezos or Bill Gates decided they were going to sell a ton of the stock that they own, in Tesla or Amazon or Microsoft or whatever, if they sold a lot of stock, realized a bunch of gains on those stocks, then they would owe taxes on those gains. Yes, maybe they're long-term capital gains rates, but nonetheless, they would owe taxes on those gains, and those would be realized gains, and they would be treated as realized income. But to say here that the new minimum tax will eliminate the ability for the unrealized income to go untaxed for decades or generations, that's interesting. And that's, that brings a question to mind, because then, you're talking about the growth of their wealth, right? Where they may be pulling their income from, that will go untaxed as long as they do not sell the underlying asset, as long as they do not sell the stocks that they hold. So, or the real estate or the whatever that they hold. So, this just brings questions to mind, but nonetheless, we'll move forward here. So it says that the new tax proposal is part of Biden's 2023 budget, expected to be released on, it says today. So you should be seeing that later on today. His new spending plan would trim 1.3 trillion from the deficit over the next decade, according to a fact sheet released from the White House on Saturday. And if you know anything about politics and anything about these budgets and economics, the idea that you could trim 1.3 trillion from the deficit over the next decade, I mean, that's a very stretch goal, to say the least, especially with all of the spending that we do. But nonetheless, that is just, take that with a grain of salt. Now, this says what remains to be seen is whether Congress will move forward on Biden's proposal. Last year, Senate Democrats unveiled a billionaires tax, which would have levied the unrealized capital gains of the wealthiest Americans, and this measure ultimately did not proceed. Now, it's no surprise why a measure like that would not proceed, simply because the money that would be at stake for a lot of these billionaires would be absolutely huge. The ability to maintain the wealth that they have, and let's not even get into the money that they give to the politicians and the lobbyists that are involved in all these different types of things. Ultimately, all the billionaires don't want, or the rich among us do not want, these unrealized capital gains to be taxed. And then that becomes a slippery slope into, like, well, do you start taxing the unrealized capital gains of the individual American like you and I, right? Because I have a taxable brokerage account, and I have money in that account that has grown and has unrealized capital gains on certain investments. If they were to tax on those unrealized capital gains, then you would actually have to go about selling the underlying assets, right, and creating the liquidity, which for you and I, even though it may be a hassle and it may be more income that we had to report and more taxes that we had to pay, it wouldn't be hard to do, and it wouldn't have a big impact on the value of the underlying asset that we held. But if you're talking about one of these billionaires, one of the richest, having to, let's say, and I'm not saying that's what they're asking here, but let's say they had to pay, 2% of their wealth every year. And this type of thing has been put on the table. Like we're saying here, last year, Senate Democrats tried to put this on the table, saying, 1 or 2% of their wealth. Well, that seems insignificant. But if, let's say Elon Musk had to sell 2% of Tesla stock, then that would do, quite a bit of damage to the stock price, right? Or if, you had Bill Gates that had to sell 2% of Microsoft stock, or, Jeff Bezos had to sell 2% of Amazon, that would do some harm, not just to their own wealth, but the wealth of individuals like you and I, who may just own an index fund that is, heavily impacted by those very large companies. And so there's a lot of underlying impacts that can be had by such a situation, not the least of which being that you have billionaires, let's say like a Mark Cuban or, Kevin O'Leary, Mr. Wonderful from Shark Tank, right? These guys from Shark Tank, they have a lot of what we call illiquid investments, right? It's one thing if you own a public company. Right, if you own a public company or own a lot of publicly traded investments, then selling shares in order to get money to pay taxes is not going to be crazy, right? It's not a crazy thing to think about. It may be inconvenient. It may cause stocks to drop, whatever, but it's not going to be just a crazy thing that you would have to do. But if you hold a bunch of illiquid investments, so like private investments, you see them making big investments into companies on Shark Tank all the time. And if you've got a bunch of those types of investments, well, you can't like sell your share in all of those investments because the likelihood that all of those small business owners are going to, or, even, medium-sized business owners are going to be able to pay you, whatever your exit would need to be is almost impossible, right? And you would be, kind of diminishing the trust of your ability to be, an angel investor or a venture capital type investor. And that would deter money from going into those types of investments, right? If you knew as, a very rich individual that you were going to have to pay a percentage of your wealth every year in taxes, then you wouldn't make it difficult to get to whatever percentage of wealth it is, right? You wouldn't go into these, privately held type endeavors if you knew that you would just have to cash out of such endeavors and maybe even do so at a loss. And so that's a very difficult thing, especially for those types of billionaires, those that do not have a large amount of their wealth tied into public markets. Now, this says in fiscal year 2021, the federal deficit totaled nearly 2.8 trillion. It's about 360 billion less than in 2020, according to the Congressional Budget Office. The swift economic recovery after pandemic lows is also a factor in lowering the deficit. The White House credited the American Rescue Plan, crafted to support relief to struggling Americans during the COVID crisis, for helping the economy grow 5.7% in 2021. Not only will less economic and pandemic support be needed for people and businesses, but a stronger economy means higher incomes for households and businesses. Because of this, the government is projected to collect more than $300 billion in additional revenues compared to last year, the fact sheet stated. So right now, that's what we're looking at. That's what this particular type of tax is going to look like. Now, there's another thing that's going on, and I think it needs to be said here along with this idea, and it really leads you to question, what's going on. Now, this is not necessarily a part of the president's plan, but this is being put on the table by members of Congress, and there are people that are getting behind this idea. And the fact that you can say on one hand, okay, we're going to lower deficits and we are going to tax the wealthy more. Okay, you can say that. But then on the other hand, we're talking about this idea of stimulus checks for gas and inflation, right? Who would have ever guessed that this might come back along? And this just speaks to the fact that this idea of stimulus checks can be a slippery slope, right? Once you start handing money out to people, then where does it ultimately stop? So this is planned to be done by some states, but even on a federal level, there's some push to pay out a stimulus check for the price of gas increasing as much as it has. I don't think that this will actually happen, but if you're going to push for something like that and you're pushing for higher taxation, you're not necessarily going for the idea of lower deficits via that higher taxation. What you're ultimately going for is like, we're going to tax more so we can spend more, and we're going to tax more so we can hand out more. And that I don't think that is appealing to many, and I don't think that's something that holds a lot of merit in the eyes of the American people. And who knows what the economic outcomes would be, but probably not extremely pro-growth over the long term. And not to mention, the White House is dealing with a ton of different things right now that are not going too well. And you just think economically, you think of the idea that inflation is eating away at the value of the tax income that they're bringing in, the tax revenues that the federal government is bringing in. They need to find some way to raise taxes somewhere, because the things that they end up spending money on are becoming more and more expensive. So if you're just taking the same old taxes, even though wages may rise, if wages aren't keeping up with inflation, and generally they are not keeping up with inflation, if that's the case, then in real terms, their tax revenues are dropping. And if tax revenues are dropping, the only way that they can get those back up to par is to either have higher wages, which takes more time, or they can just increase taxation in some of these ways, like what is being proposed here. Now, generally, would a tax like this be crazy, right? So we're talking about 20% minimum billionaire tax on their income, right? If you're just taxing the income that they bring in, like just their salaries, I don't think this is a bad thing, right? This is something that would be expected. I mean, generally on a billionaire's income, or, on the income of a CEO that is making, $1 million plus salary every single year, some cases far more than that, paying 20% of that shouldn't be crazy, because the federal government says via the tax brackets that, they should owe at least that much. Now, I think that makes plenty of sense. Now, if you are trying to dig at the idea of unrealized capital gains, or you're trying to get to this idea of unrealized income being taxable, then you're starting this slippery slope, right? And then, right now it's going to be the $100 million households, and then maybe tomorrow it's the $10 million households, and then the $1 million households. And then you start dipping into people like you and I, who have done good things with their money and that have ended up building wealth. And then, they have to pay such a tax as well. So ultimately, I'm not saying that everything has negative motives here. I think this is a far more watered down idea than the idea of just the straight up wealth tax. But I think that the president is trying to keep a promise, right? Trying to keep the promise of taxing the rich more, and taxing the, not taxing the general individual as much. Now, on a general note, I don't think, additional taxes is ever going to be a good thing economically, right? Because ultimately, if you're increasing taxation on wealthy individuals, you're also decreasing their ability to use excess cash flow that they have to make other investments, or to do certain things that are going to be productive for society as a whole, and to provide investment for small business owners, and to provide money that people would need to get businesses off the ground, and to grow things, and to be innovative, and all those types of things. All of those things are very, very good things. And anytime you're taxing those who have that big of a reach, who have the ability to make big differences in society, like some of the richest out there do, then that can be a loss that's associated. Now, the other question is, will this ever get past Congress? I don't know, right? I don't know if it will. I would think that many of the moderate Democrats would have a hard time swallowing any type of tax increases. They didn't necessarily like it last year, and I don't know if they'll like it this year either, even if it's something like this that is a bit more watered down. But I thought that this was interesting. I thought this was something that you all may be interested in, because it is such a hot topic. It is something, and I've given you some of my opinions on things today. Obviously, I'm not a big fan of excess taxation. Do I think that everybody should be taxed fairly? Sure. But then the question is, like, what is fair, right? Is fair equal, or is fair unequal? Is fair based on your wealth, or is fair based on your income, or is fair based on your income until your wealth is this much, and then it's based on your wealth, or your wealth and your, like, it all gets very hairy, right? And so I don't envy those who try to create legislations that do create some type of equality among the tax code. And there's no doubt that the tax code is so crazy and is so just jumbled and almost contradictory in many cases, and leaves loopholes and all these types of things, because I mean, there's just so many people who want different things, and there's so many different things that you're trying to control for and make sure that this is taken care of while still leaving this open. And it's just a part of regulation that I'm really glad that I would not have any part in. But nonetheless, right? I think that fair taxation is a good thing, right? Do I think that generally we should all pay a percentage of our income? Sure, right? Do I think that there are probably loopholes open to people who have information that others don't, that makes the tax code more beneficial to them? Sure, right? I think that's probably the case. But do you fault those who have all of the wealth or have the high incomes, or do you fault the code itself? Do you fault Congress itself for not having a stronger regulation against certain lacks of taxation, right? Who do you ultimately fault? Because let's not act like you and I don't always look for a high tax return. Well, what does a high tax return mean, right? We talked about this before. If you got a big tax return, which you shouldn't, and I don't want you to, right? But everybody seems to like one. Why? Because if you get a big tax return, what that ultimately means is that you paid more in than you should have, right? And so they gave it back to you, right? So ultimately, we all like when it's determined that we don't have to pay as much, because if we had to pay more than what we had put in, then we would owe more taxes, and nobody tends to like that, right? So everybody tries to decrease their taxable income. Everybody tries to decrease in a legal way their taxes as much as possible. And undoubtedly, if you have people who have very high net worths, who have very high incomes, who can afford some very good legal and accounting minds, then what are they going to do? They're going to make sure that they pay as little in taxes in a legal way as possible. And I believe if they're doing it illegally, that's completely wrong, right? But if they are doing it in a legal manner, then who is ultimately at fault here? So, anyway, just some thoughts from me. But this is something maybe you can talk about. Something you may want to leave some good comments for me about, and just kind of see where you're at. See what you think about taxing the wealthiest in this way. And see what you think about this versus like a straight up wealth tax or something like that. So let me know in the comments down below. I'll be sure to start a little polite discourse, right? This isn't anything political. This is just something that's going on right now, and that can impact our economy in a very real way, and can impact the very wealthy in a very big way. Is this applicable to most of our lives? No. But it doesn't mean that we don't like to talk about it and give our opinions anyway. So thanks for watching this video. If you could go down below, hit the big red subscribe button, like this video, leave me any feedback in the comments down below, and I'll be sure to respond to anything you leave down there. If you're listening on Apple or Spotify podcasts, be sure to subscribe and leave me a review on either one of those platforms. Follow me on social media at MNO with Dylan. And that's really good supplemental materials to all the things I'm putting out in these long form episodes on YouTube and the podcast every single day. And then if you need somebody to help you to build a financial plan and keep you accountable to that plan over the long term, then I can do that. Just DM me on any of the major social media sites. Tell me that you're interested in financial coaching sessions, and you and I can begin working together, pushing towards your long-term financial goals, and ultimately pushing you on towards long-term financial freedom, which is what I hope for every single individual who's watching or listening to this show on a day-to-day basis. So tune in tomorrow as I continue talking about personal finance topics that I think could be useful for you in your long-term financial journey. So thanks for tuning into this episode of Money's No Object. I'm your host, Dylan Howell. God bless.